Since the stock market remains bloody red scary past Halloween, here are some green stocks for a balance heading into the holiday season and new year. Beyond being companies that work on clean technology to help the environment, they're also generating green in the form of potential growth and gains for their investors. Plug Power, ticker symbol PLUG, is one such example, as it's becoming a heavyweight in the hydrogen sector, specializing in the production, storage, and delivery of hydrogen for energy generation. Its hydrogen-based technologies span fuel cells, electrolyzers, liquefiers, and cryogenic equipment, designed for industries like e-mobility, stationary power, logistics, and manufacturing. At the core of its heart is its PEM, proton exchange membrane, fuel cells, particularly the GenDrive system, which replaces lead-acid batteries in electric industrial vehicles like forklifts. This fuel cell technology provides continuous power, offering advantages like faster refueling and longer operational time compared to traditional batteries. To make things even cooler, Plug's electrolyzers use renewable electricity to produce hydrogen by splitting water into hydrogen and oxygen. These electrolyzers, manufactured at Plug's Gigafactory in New York, allow businesses to generate hydrogen on-site, reducing dependency on external suppliers. Plug's GenFuel platform integrates liquid hydrogen storage, delivery, and dispensing systems, optimizing the hydrogen supply chain for customers. The company produces liquid hydrogen at its facility in Georgia and aims to expand its production capacity across the U.S. and Europe, with plans for additional plants in Texas, Louisiana, and international locations such as France, Spain, and South Korea. Plug is proliferating hydrogen power rapidly, expanding its presence in multiple sectors. It is particularly focused on the transportation industry, targeting hydrogen-powered heavy-duty vehicles such as trucks, buses, and cargo vans, and even exploring potential applications in aviation and drones. For example, its ProGen fuel cell technology is being used in a joint venture with Renault to provide hydrogen-powered delivery vehicles in France. For stationary power applications, Plug's GenSure system offers hydrogen fuel cells for backup and continuous power, positioning itself as an alternative to diesel generators, making these systems ideal for data centers, microgrids, and EV charging stations. Though realistically, there hasn't been an immediate jump to hydrogen right away, since legacy industrial gas and providers of battery and combustion backup power can still leverage their entrenched market share and position. Nonetheless, hydrogen adoption has gradually been taken hold and seemingly accelerated in recent months. For instance, one of Plug's newest high-profile partnerships will have it supply 3 gigawatts of electrolyzer capacity for a green hydrogen-to-ammonia plant in Australia, a massive project powered by solar energy. This is expected to reduce costs and emissions in the ammonia sector, which serves industries in Asia and Europe. Additionally, Plug has signed another electrolyzer deal in Uzbekistan, supporting a $5.5 billion green chemical production facility, producing sustainable aviation fuel, green urea, and green diesel. In Portugal, Plug delivered its first GenEco 10-megawatt electrolyzer to Galp for a large-scale hydrogen project at the Sines refinery. The project aims to replace 20% of the refinery's gray hydrogen with renewable hydrogen by 2026. Plug is also involved in Germany's H2CAST project, providing hydrogen for energy storage and grid balancing, and has also begun making inroads into the Netherlands. As a result, revenue is on the rise, with electrolyzer sales almost tripling. Fueling optimism gross margin neutrality will be reached by the end of the year, helped by improved cost management, hydrogen pricing, and service efficiency, in addition to beneficial clean energy tax credits, which could help stimulate customer demand. Indeed, demand is a constant point of contention for emerging green energy companies. That isn't so much the case when the focus is on recycling, seeing as how there's no shortage of waste around the world, especially of the plastic variety. That's why PureCycle Technologies, PCT, constantly enjoyed praise, from when it was more of a theoretical concept to now when it's growing up to blossom at commercial scale. ready to revolutionize the recycling of polypropylene, a widely used plastic that is notoriously difficult to recycle. PCT utilizes a patented purification technology developed by Procter & Gamble to convert waste polypropylene into ultra-pure recycled UPR resin with properties comparable to virgin plastic. This process uses minimal energy, avoids chemical reactions, and is more cost-effective than traditional recycling methods, resulting in high-quality resin suitable for applications such as food packaging, automotive, consumer goods, and textiles. PCT's technology separates contaminants, odors, and colors from polypropylene using solvent, temperature, and pressure without altering the polymer's molecular structure. The result is a resin with mechanical properties like melt flow index, tensile modulus, and impact strength that match those of virgin polypropylene. This enables manufacturers to use 100% recycled content without sacrificing performance or appearance in their products, leading to PCT receiving FDA approval for its Pure5 UPR resin for food contact applications, broadening its market appeal. Commercial operations are centered around its Ironton facility in Ohio, which began construction in 2020 and can process up to 182 tons of feedstock daily. In order to meet growing global demand for sustainable polypropylene, PCT plans on expanding its operations with additional facilities in Augusta, Georgia, and Antwerp, Belgium. Other crucial parts of growth involve scaling operations and securing consistent feedstock supply. With PCT sourcing its feedstocks from pre-sorted waste materials and from its feed prep facilities, targeting the 150 billion pounds of polypropylene waste generated annually. In these areas, things aren't always so straightforward, and PCT has faced setbacks, including the cancellation of a joint venture with SK Geocentric in South Korea due to execution issues. And since the Ironton facility's performance is central to PCT's success, any disruptions such as equipment failures, regulatory non-compliance, or supply chain issues could threaten operations, which is why expanding beyond that one core facility remains paramount. To speed things up, PCT has raised substantial capital to fund its growth, including a $300 million raise in 2023, with plans to build new facilities in Thailand and expand in the US and Europe. By 2030, PCT targets 1 billion pounds of installed production capacity annually across the US, Europe, and Asia, aided by collaborations like the one with Churchill Container to produce sustainable cups for sports teams, and with Drake Extrusion to produce yarns for rugs and apparel. In the packaging industry, PCT is testing its Pure5 resin in biaxially oriented polypropylene, BOP films for food packaging applications with promising results. It's also working with Landbell Group in Europe to enhance polypropylene recycling, aligning with the EU's circular economy goals. So, despite being in its ramp-up phase and generating minimal revenue, PCT's innovations are gaining industry recognition, especially after it earned the Association of Plastic Recyclers APR-PCR certification for its Pure5 resin, further validating its sustainability credentials, adding to its firm foundation as it works toward profitability, growing partnerships, technology advancements, all fueled by increasing customer demand, giving PCT a gorgeous green glow in the global market for sustainable materials. Likewise, Clean Energy Technologies, ticker symbol CETY, gains good publicity as it essentially combines the concept of clean energy and recycling in the form of clean and recovered energy. Its blended focus on efficiency and energy optimization enters it into a unique place in the so-called zero-emission revolution, offering waste heat recovery, WHR solutions, waste-to-energy, WTE technologies, and engineering services for small to mid-sized projects across North America, Europe, and Asia. CETY operates in 4 primary business segments: Clean Energy HRS and CETY Europe, Waste Heat Recovery, CETY Renewables, Waste to Energy, Engineering and Manufacturing, and CETY HK, Natural Gas Trading in China. WHR uses organic Rankine cycle ORC systems, namely CETY's clean cycle generators, which convert waste heat into electricity. Since these systems are highly efficient, offering competitive advantages in the market, CETY has already deployed over 120 units and plans to expand to upwards of 8 installations per year. Waste-to-energy solutions encompass waste processing equipment and proprietary technology, such as the high-temperature ablative pyrolysis (HTAP) biomass reactor. This system can convert various types of waste, industrial, municipal, agricultural, into renewable natural gas, biodiesel, hydrogen, methane, and biochar. HTAP technology is cost-effective, reduces pollutants, and bypasses the need for waste pre-treatment, making it a sustainable alternative to traditional incineration methods. In terms of engineering and consulting, CETY helps with design, project management, and consulting for clean energy solutions. Their services support customers in installing, operating, and maintaining waste heat recovery and waste-to-energy systems, ensuring the integration of clean energy into industrial and energy projects. Globally, the waste-to-energy market is expected to grow at a CAGR of 7.35% from 2021 to 2026, driven by government regulations and urbanization in Asia. Similarly, the waste heat recovery market is forecast to reach $114 billion by 2028, fueled by increasing energy demand and sustainability goals. Looking at the long term, CETY is focused on expanding its WHR and WTE technologies globally. It aims to enhance its role as an independent power producer by increasing the capacity of waste heat recovery systems, particularly for mid- and large-scale projects. It also plans to grow its WTE business by developing small to mid-sized plants that produce renewable energy for the grid or for resale. In China, CETY is capitalizing on growing demand for natural gas and has a joint venture for LNG trading operations. It's also seeking opportunities for joint ventures in the waste-to-energy sector, while leveraging its engineering and manufacturing expertise to participate in clean energy projects across Southeast Asia, Europe, and the U.S. Since CETY's business performance is impacted by fluctuating demand, economic conditions, and regulatory changes, it plans to expand its operations and investments, leveraging federal incentives for clean energy, such as the Inflation Reduction Act, and aiming to improve its balance sheet for future growth. It's also exploring partnerships and joint ventures, particularly in Turkey and China, to source components and develop new facilities. Now it's your turn. What do you think about clean energy technologies, Plug Power, and PCT? Please share your thoughts, and for more on stocks and crypto, follow Ascencore. See you next time.